Good evening, ladies and gentlemen, and welcome along to Trader Talk, to IC Markets webinar, Commodity Trades Live Technical Analysis for December 2022. So we are going to be talking trading, and we are going to specifically be talking about commodities, and we're going to be doing a live technical analysis for this month of the major commodity markets. My name is Chloe and I'm with Trade with Precision, and a little bit of background information about myself. I'm a trader. I've been trading for 12 years, based in London, and I'm predominantly a technical trader, so I would say 95% of my trading decisions are based on technical analysis. I am a trend-based or momentum-based trader, so I trade with the overall market flow, with the overall momentum of the market. I trade many different markets. I trade commodities markets, I trade index markets, forex, cryptocurrencies, stocks, various different markets. And I would just like to give you the opportunity to take a couple of moments to read through this next slide, which is the risk disclaimer. So have a look through this slide, make sure you agree with everything therein, and then we will get started. Okay, that should be enough time to read through that risk disclaimer slide. A little bit of a disclaimer for myself as well. I am mum to a 2-year-old boy, and it is his bedtime at the moment, and we've actually just been away for, or apart from his dad for various reasons, travel and work reasons. And so bedtime with anyone other than myself is a pretty fraught endeavour. So if you do hear any noise carrying on, then I can only apologise. Hopefully it won't carry through too much, and hopefully he will settle down at some point. So with that said, let's get started with the agenda for today. We're going to be looking at some recent moves and trends in the commodities markets. We're going to look for support and resistance levels to watch out for. I'm a big fan of support and resistance levels, so I'll show you what my major support and resistance levels are on the major commodities, and I do find that really helps with kind of mapping out where price might end up next. And we're going to look out for potential winning trades on multiple timeframes. So all of that is going to be taking place on the IC markets. I tend to use MT5, so I'll just take you through to my MT5 platform here. Okay, so you should have my MT5 platform up. And so I'm going to start off with gold. Gold is one of the most liquid commodity markets. It's one of the most highly traded commodities markets. So it's a good place to start. And what I will do is I'm going to actually start with the monthly time frame. I'm going to skip straight to looking at the horizontal levels that I have on my charts. And in order to do that, I do need to go to the monthly time frame, because a couple of the strong horizontal levels of support and resistance I've got on my chart are based from quite a way back in 2011, 2012 or thereabouts. So you'll notice that this horizontal level that price has actually recently bounced from is a strong level of resistance from back in 2011, 2012 here, is around the $1,800 mark. So that is a strong and important level of resistance there. And then beneath price, I have a strong level of support down here. It's around 1530, and that again is support from back in 2011, 2012. Above price, I've got resistance from what was previously the all-time high before 2020 happened, but the previous all-time high from back here around 1915 or thereabouts. So those are a few of the important horizontal levels of support and resistance from the monthly time frame. If we then go down to the weekly time frame, we can see a couple more relevant levels, starting off with this level here, which has been support more recently, so 2021 mainly support over here, and also 2022. That level is at 1680 or thereabouts. And then there is another level that I have on my charts at 1730. It's another level of support. That's more of a daily level there of recent price action. And that pretty much completes the kind of roadmap I have at the moment on gold. I tend to try and have on my charts a couple of relevant levels above price and a couple of relevant levels below price. I try and keep my charts as clean as possible because price action is really the key. And if we can't see the price action because we've overlaid so many indicators and levels onto our charts and drawn so many trend channels and Fibonacci's and all sorts, then we can kind of lose track of the most important thing, which is the price action. So just a couple of levels above and a couple of levels below price, generally based on the monthly or weekly time frames. One thing I did want to add as well, which I forgot to mention at the beginning, is I do like to keep these sessions as interactive as possible. So if you do have any questions as we go through, then please do feel free to pop those into the questions box. I'd be more than happy to answer as many questions as I possibly can in the time that we have. So make the use of the questions box there if you do have any burning questions that you want to ask. I'm sure that the answers to those questions would be helpful or at least interesting to the other people listening in as well. Okay, so those horizontal levels are in place then. So now the highest time frame that I tend to place trades on is the daily time frame. And so I go down to my daily time frame where I analyze trend. And in fact, I've already got an idea of direction from the often the monthly, if not at least the weekly time frame. So on the weekly time frame here, I do have what I have down here is a reversal pattern. It doesn't really matter what we call this thing, whether we call it a triple bottom because these three lows are pretty much in the same place. Whether we call it a double bottom because really it's just kind of two swings to the downside here, whether we just simply call it that these are lows that are hitting this level, which it has become support and price has moved up from there. So whatever we call it, it is an indication from this bottom area here that price is going to move up, and in fact it has moved up since then. So since then we have got higher highs and higher lows in price action on the weekly time frame. Price has broken up through this previous high here, which is why I've got this level on the chart here, because price has broken up through that level. It's come back down to retest that level and it's moved up from that level. So from that price action, I have been very bullish and trading long on gold. Now that we go to the daily time frame, I can see an uptrend here. I can see higher lows and higher highs in price action. I also see that this horizontal level here, the 1800 level, now that is a strong horizontal level. If you remember where that level comes from, is all the way back here. It was strong resistance over here. So price is trading beneath that level currently, and that level is therefore likely to act as strong resistance. Now, just yesterday, in fact, we had a couple of days of price action closing above this level, and that was a very bullish sign for me. And had price remained above this 1800 level, I would have remained bullish and I would have been continuing to look for long opportunities in this market. However, what has happened today, and we've actually seen a bit of a change in direction on most markets today, including Forex and other things. It has been a very bearish day for gold today, and it just so happens that that bearish day has come when price is around this 1800 level. And it's, I suppose, easier to see on the weekly time frame here. If we look here on the weekly time frame, this is the level that we're talking about here, and it looks like we're not through the week yet, but we've got one more day of trading, or just over one more day of trading before the week is over. But if the week ends anything like where we are now in this current candlestick, it's a bearish candlestick. It could even, price could even move lower from here. It could even turn into a bearish engulfing candlestick or something like that. But even if it doesn't, even if price just ends as it is on this weekly time frame, that is a very bearish candlestick, and it is therefore a bounce from this 1800 level, because price on the weekly time frame hasn't actually yet closed above that 1800 level. So it's a very bearish signal if price does close the week after another day's trading around this kind of area with this kind of bearish candle here. And if that happens, then I will struggle to justify any further long positions really until price gets back above that 1800 level. It depends on how far price falls down. If we go back to the daily time frame, if we were to see something like, you know, if price were to fall down here and then perhaps come down further and then turn around with a double bottom or some kind of reversal price action here and start to show higher lows and higher highs again, like we saw around this area here, then I may start trading long again, despite the fact that we're actually beneath that 1800 level. But if price remains fairly close to that 1800 level, then I don't want to trade long into that level, because there is a chance that price could yet again see that level as horizontal resistance, and therefore I would be entering long beneath the resistance. Price may turn around and stop me out, or best case scenario, it might range beneath this level and I could end up in a trade that bobs around negatively for quite some time. So my preference really would be to see okay, so we've got a few scenarios that could play out, and I want to also mention as well that while I did say that 95% of my trading decisions are based on technical analysis, I do also take fundamentals into account. And fundamentally at the moment, I am actually bullish on gold, because seasonally gold tends to be strong at the end of the year. December tends to be a strong month for gold. And so I'm still prioritizing at the moment trades that I find in the upwards direction. And I'm more keen to trade and hold positions long rather than get in and out quickly, because of that seasonal bias that I do have on gold. So with that said, my preference would be for price to actually turn around here and perhaps have a bullish day tomorrow, close back above this level here. If the weekly candle closes back above that level, if we just go back to the weekly time frame, if the weekly candle can come back up and close above this level, then there is then the potential for a follow through during the following week or two for further price action to the upside. And in terms of reward to risk, the next horizontal level, the next major horizontal level that is a potential sticking point for price would be this level up here at 1915, which is quite a way off. In terms of reward to risk on a daily time frame, that would be a significant reward to risk on a daily trade there, or indeed it could be an opportunity to get into more than one trade if price trends and cycles up to that level, we could potentially look out for trades at each of these pullbacks. So my preference would be to have a bullish day tomorrow with a candle that closes up above this 1800 level, and then next week I would be looking for a continuation of that and long trades past that point. Alternatively, and seeing as this has been a very bearish day today, if the bearish price action continues, then it could be that the pullback could come down lower. I would then be looking for a reason to return to trading to the upside. So wherever that might happen, and I would point out as well that if price does retrace this far, then it starts to look a little bit like the beginnings of a head and shoulders pattern, in which case there could actually be more bearish price action, and that could be the kind of trigger, if you like, to get price down through this 1730 level and actually cause some further downtrending in gold. But alternatively, if price just comes down here and then I see higher lows creeping back in, then I will look to start trading long on gold. And if I'm going to be trading long on gold between these two levels, then it's just important that I keep an eye on the reward to risk and make sure that any trade I'm entering has a good enough reward to risk to take profits before asking price to break through this major 1800 level. Because it might be, if there are long trades setting up down here, it might be that price action could reach this 1800 level and it could break down again, and it could bounce at that level again and come down. So if I'm going to be entering any long trades between these two levels, I want to make sure that I'm out of the trades before this level, or at the very least I have scaled out of the position. So you know, we don't necessarily have to just have one target to a trade. I could enter a position down here, and I could have a first target here and perhaps hold more of the position open for a more ambitious target later on. So in terms of what might happen next with gold, it really depends on especially how tomorrow's price action goes as to what I will be doing in the coming week. If tomorrow's price action is bullish, then I will continue to look for long, and by bullish I mean I really do need to see price above this 1800 level. Then I will continue to look for long opportunities into next week. If price continues bearishly, then I need to wait for some kind of price reversal in order to get a return to the uptrend before I can start buying gold again. Now, that's only talking about buying gold, really. If I were to change my bias and want to trade short on gold, what I would need to see really, in all honesty, I would probably need to see a break of this level down here, because price could trend on the daily time frame down here, but these moving averages here, we've got the 10 moving average, the 20 moving average, and the 50 moving average. They're all pointing upwards in support of that uptrend. And if price now starts trending downwards for a time, it's going to still take a little while for all of those moving averages to actually come into alignment, by which time price could be likely to be close to this horizontal level here anyway. And because that's another horizontal level of potential support, I wouldn't necessarily want to be trading short directly into that level. So I would probably then simply be patient on gold and wait for price to break down through that level, perhaps pull back and retest, and then maybe take a short trade down to that next level of support instead. I'm not really in a hurry to jump into short trades on gold. Because of my fundamental long bias on gold, if I see any long setups, I would say I am very keen to jump into those long setups. If I see a strategy set up long on gold currently on any time frame, then I am keen to jump into that. If I see any short setups, then as a technical trader, I will take them, but they do need to be much more perfect, I would say. I would need to see everything lining up for me to be trading short on gold currently. In terms of intraday, well, get rid of that pen. In terms of intraday, so yesterday I was looking at price above the 1800 level, and I was actually ready to place a trade with an entry above the high of this candle here and a stop loss beneath the low. But this candle, this one here, because that is a bullish candle, and it was bouncing up from that 1800 level, having just recently broken through. So the price action was suggesting a potential for another move to the upside, and I was very keen to trade long from that 1800 level, having recently broken through it. That trade never actually triggered in. So with an order at the top of that candle, price never actually went up there. So the order didn't trigger in, and since price has moved downwards. So in terms of intraday trading, if, and again it's a big if tomorrow shows some bullish price action and manages to get back above this 1800 level here, then I would yet again go down to the lower time frames, go down to the 4-hourly, go down to the hourly, potentially even lower than that, to look for trend trading opportunities to the upside. However, if tomorrow's price action is not bullish, then it's going to be a case of looking for intraday trades to the downside. Now, where I said that I wasn't likely to trade from where price currently is down to this next horizontal level of support on a daily time frame because of these moving averages, and I would need to wait for the moving averages to come in support of that downtrend and line up to the downside. On a lower time frame, such as the 4-hourly or perhaps hourly time frame, I mean, you can see on the hourly time frame actually those moving averages are already pointing down. So I don't necessarily have so long to wait if I want to start trading short on an intraday time frame. And there is still plenty of space to trade short between where price currently is and this next horizontal level. So what I would say is I would ideally be probably waiting for tomorrow's price action to play out, and if price continues bearishly tomorrow, I would say ideally I'd like it to get beneath this previous low here, and if that happens, then I would start to look for short opportunities on the intraday time frames. So for example, on the hourly time frame there, I would wait for price to get beneath this area here, and then hopefully pull back and give me a short entry in that kind of area there. So there's a lot of waiting and a lot of ifs in terms of the gold. I was, you know, if this webinar had been yesterday, I was pretty positive about the gold price action, but today's price action has changed things somewhat, so we do have to be a little bit patient on that one. Now, the other precious metal, which is pretty commonly traded, not perhaps quite as liquid as gold, but it can tend to move quite similarly to gold at times, and that's silver. So silver, going to the monthly time frame to pick up these levels of support and resistance. So this level beneath price, it's around $21, and that is a level of resistance from 2016, 2017, resistance from back in 2013 as well, resistance from all the way back in 2007, 2008 time. It's also been resistance here as well, although it has been broken through, but that's a pretty strong level of what now could be support because price is above that level currently. The next strongest level of support is down here around the $14 area. So I've got that marked in as well as my next level of support beneath price on a monthly time frame. And then above price, I've got a strong level of resistance at around $26. That is based on this support from over here. It's a similar kind of chart shape to the gold chart, and this support level is a similar one to the one on gold. So from 2011, 2012 kind of time there. And then above price again, it would be these previous highs over here more recently from 2020. So those are my 4 levels of price, 2 above, 2 below, of support and resistance from the monthly time frame. And price action right now is pretty much bang in the middle of 2 of those horizontal levels. So I don't envisage any major support or resistance getting in the way of any potential trades taken in or around the area that price currently is. So with that having been said, on the daily time frame, there is an uptrend in price, higher lows and higher highs. And I have been waiting for a pullback into the moving averages, which is generally an area that I see as an equilibrium zone. So it's an area where potentially price could pull back to in an uptrend or a downtrend before moving back in the direction of that trend. And so I've been waiting for a pullback. Now, I don't usually particularly like seeing the pullback happen all in one candle, ideally. If I'm trading pullbacks, I like to see the pullback show weaker price action than the move in the direction of the trend. So if I can kind of clarify that a bit more. So this move here, from the bottom of the move to the top of the move, has taken place in 1, 2, 3, 4, 5, 6 candles. The pullback so far from the top of the move down to where price currently is, that's 1 candle, but it's actually taken out 1, 2, 3 bullish days worth of price action. Actually 4. It's coming down to the low of this candle here. So it's removed the gains of the last 4 previous days of trading in just 1 candle. So that's what I mean by I prefer to see my pullbacks weaker than my pushes in the right direction. So I would actually prefer to see a push in the right direction, nice and strong, and then a weaker pullback over the course of several candles. Then I would be looking for a nice strong bullish candle in order to then perhaps take a long opportunity to the upside. So while I have been waiting for a pullback on silver, it's not particularly ideal to me that that has so far happened in all 1 candle. Now, what we don't know is how far this pullback is going to go. So it could be that we do get a few more candles of pullback first before then seeing some kind of bullish price action, in which case I would be looking out for a long opportunity after those few more bearish but not quite so strongly bearish candles. As things stand, if I were to get a bullish candle right here, then it still could qualify as a potential entry opportunity. What I would simply say is I would perhaps reduce the risk on that opportunity because it's just been one strong seller candle, followed by then the buyer candle that I would be looking out for a trading entry. But in terms of trend, I'm still seeing an uptrend. I see no reason technically to stop trading silver to the upside. Whereas with gold, the difference with gold is price is bouncing from this strong horizontal level here. So I do have a technical reason to believe or understand why price is bouncing in this area. And actually, a technical reason to predict that price might have bounced even before it happened. Whereas on silver, there isn't really a strong level of resistance here. So there's no reason for me to expect or anticipate price turning around in this area. So that's why I remain more bullish on silver perhaps than I do on gold at the moment. So that's definitely on my watch list for trading long. Now, in terms of intraday trading, it's a little tricky here on the 4-hourly time frame, because while price has pulled back, and it's pulled back to the moving averages and then some, but actually the RSI is looking quite bearish here at the moment, and so it is looking like potentially there could be a bit more of a pullback. I would say that this area here is key. So if price does come down and take out these lows here, then I would anticipate a little bit more bearish price action before a return to the uptrend, which would potentially go along with my desire to see another few bearish candles on the daily time frame before looking to return to the uptrend. On the lower intraday time frames, as I said, I'm a trend trader and I trade with the overall market flow, market momentum. So yes, there could be intraday trades to be taken here on silver to the downside, but because price is currently trending to the upside, I'm actually keener to wait for long opportunities to the upside rather than trade this short at the moment. Gold, again, slightly different outlook because of the fact that price is bouncing at this horizontal level. So I fully believe that there is a possibility that price could have bounced here and therefore be heading back down to this next horizontal level down here. Whereas on silver, at the moment, all I have evidence of is a pullback in an overall uptrend. So the overall market flow is long, therefore I want to be trading long with the overall market flow. So that is gold and silver. I'd like to move on now to talking about the crude oils, starting off with Brent crude. Now, this really does look fairly good to me, because while the gold bearish price action today has kind of scuppered my bullish view on gold and my willingness to take trades to the upside on gold. On the crude oils, this bearish day has actually just played in favor of the technicals playing out. So we'll go to the monthly time frame first of all to get the levels. So I have got a level beneath price, which is around $70. I've got a level above price, which is this level here, which is around 86.50, this one here. And then I've got a kind of intermediate level here, around 77.55 or thereabouts. I've got another higher level, I've just marked in $100 a barrel. That can be quite a strong psychological level. You know, $100 a barrel, quite a psychological level. It's likely that the price would react at around that level, even if it's just slightly. So the horizontal levels I've got in there are based on this previous high over here and the support and resistance from over here as well, resistance, support. So those are the strong horizontal levels. On a weekly time frame, price is trending downwards, lower highs and lower lows. In terms of where we are in between these levels. We're between the two major horizontal levels, and I just have this next kind of intermediate level drawn in at this previous high over here. So this intermediate level, it's a level that I would anticipate price potentially reacting at, but it wouldn't necessarily prevent me from trading. The strong, kind of thicker levels might prevent me from trading if I were to be trading directly into one of those. But this intermediate level, it's just there as a guide, but it's not going to prevent me from trading. What I do focus on is the fact that I see bearish price action. So I've got lower highs and lower lows. There is a downtrend in place. The MACD and RSI are both bearish as well, so there's bearish convergence of those momentum indicators, which suggests that the trend to the downside is healthy and there is still momentum behind this trend. What I really like is the fact that price has now pulled back up to these previous lows over here. So there's a downtrend, lower highs, lower lows. Price has pulled back to these previous lows over here, which could potentially form a small level of what was support, now potentially resistance, and therefore price pulling back to that level, also being within the area between the 10 and 20 moving averages. And the fact that today so far, and it looks like today's candle is going to close as a bearish candle, that then gives me an indication that potentially the move to the downside could continue from here. So I'm likely to take a short trade from here. So that's Brent crude. And in terms of a target for that short trade, what I really like about this actually is that even though I mentioned this horizontal level wouldn't put me off trading, I do really like the fact that there is a one-to-one reward to risk here. If I were to, as an example, if I were to place an order beneath this bearish candle here with a stop loss at the high, if price moves down to this horizontal level here, that's a one-to-one reward to risk. So my options would be either to close the trade at 1-to-1 and take my one times profit, or what I could do is I could scale out of the position. I could scale out of half the position at 1-to-1, which then means if I take half my profits at 1-to-1, that means if price turns around and then goes and stops me out, it's a break-even trade. I won't actually lose any money. Whereas if price carries on further to the downside, then I still have half the position open that I can then take profits on. So I like the fact that there is a one-to-one reward to risk before that horizontal level. However, that would not be my ultimate target. My ultimate target would be this horizontal level down here around $70 a barrel if I were to be trading short on Brent crude. In terms of intraday trading, I am happy to just wait for tomorrow's price action to play out, because of course, if I were to enter an order at the bottom of today's price action, then price would have to continue downwards in order to trigger in that order. In which case, price would then, of course, have to continue downwards on these intraday timeframes as well, which would then start to look like the return to a downtrend on the intraday timeframes, because at the moment this pullback has kind of stopped the trend on the intraday timeframes. You can see here on the hourly timeframe it's actually been trending upwards, but then I have this double top here, and it looks like price may be about to start trending downwards on that hourly timeframe as well. So if the hourly time frame sets up actually before the daily time frame with lower highs and lower lows, all I would need on this hourly time frame really is for these moving averages to come down. So I need price to continue making lower highs and lower lows so that the moving averages come down, and then I can start looking out for short opportunities on the hourly time frame as well. The benefit, of course, to that is that if I do find a short opportunity on an hourly time frame, for example here, and the candle is likely to be around about that kind of size, that means that if price makes it all the way down to this level here, that is a very sizable reward to risk trade. So, and it's still possible to get that one-to-one before this next horizontal level of potential support. So the next market that I want to look at, fairly similar, it's the West Texas crude oil. So let's go to those monthly levels. So I've got a level beneath price, which is around $65 a barrel. That was a level of resistance over here, has become support, could potentially be support again. And then I've got another level of what has been strong support and strong resistance over here in the past at $77. That's the level that price is just kind of hovering around right now. Above price, I've got a level at around 85.10 or thereabouts. That's the level what was support from all the way back in 2012, 2013. And above that is more of a kind of weekly level above that at $95 there. So if we just go down to the daily time frame now, again, I see lower highs and lower lows in price action. I see bearish RSI and bearish MACD, so we've got convergence of those momentum indicators, indicating that, or suggesting that the potential for a further move to the downside could be strong. The momentum to the downside is still there. And again, one thing I really like about this is the fact that price is showing these lower highs and lower lows, but price has pulled back. And price has pulled back to this area, which is pretty much level with these previous lows here, much the same as the Brent crude oil chart. But that level happens to be a strong level of support and resistance as well. It's that $77 level. So there is even more reason to potentially not assume, but look out for a return to the downtrend at this level if this horizontal level holds. So I've got a nice healthy downtrend here. All of those moving averages are pointing in the right direction as well. MACD and RSI convergence. And then I've got a nice healthy pullback into this area in and around the 10 and 20 moving averages, that equilibrium zone, as well as these previous lows and the horizontal level of support and resistance. So this is definitely a trade that I would be considering taking. And again, it would be a case of placing an order at the bottom of the bar with a stop loss above those highs there. And there isn't really a horizontal level really in the way of price. Let's just bring that up. So the next price target that I would have would be the $65 level or thereabouts, which gives quite a considerable reward to risk. If I just put that approximately back on there, it's at least a 3-to-1 reward to risk on a trade down to that next level at $65. There's also more than a 1-to-1 reward to risk before this previous low. So if there was a trader who prefers to be conservative and scale out of trades at 1-to-1 and make sure they're in safe trades, then that could be an option as well. In terms of intraday trading, on the 4-hourly time frame, this price action does look a lot like the pullback is starting to finish here. So we've had this move to the upside, and then price is starting to put in its reversal price action here with this double top pattern. So that's on the 4-hourly time frame. I wouldn't necessarily trade it on the 4-hourly time frame at the moment because of these moving averages not quite being in alignment. However, on the hourly time frame, it's likely that I would just need to wait for another move to the downside. So another move below here, preferably below this low here, followed by a pullback. That would then bring the moving averages into alignment. Sorry, I'm not very good at drawing that. And then I would be looking for a short trade in around this area, and that would give an extremely favourable reward to risk down to that horizontal level there, and in fact also a very favourable reward to risk potentially down to this previous low here for those traders that are more conservative. So I'm bearish on both Brent crude and West Texas crude, and actively looking for an opportunity to enter on those daily timeframes as well as on the intraday timeframes. So something there for daily traders potentially, and something there for intraday traders. It's especially this WTI with the $77 a barrel level. I'm very keen on that indeed. The final commodity market that I wanted to have a quick look at is natural gas. So just taking a look on the monthly time frame here, and actually it's not particularly easy to get horizontal levels based on previous price action here, because we don't have a huge amount of data to look at. However, on the weekly time frame, I'm bearish in terms of trend on the weekly time frame, just in terms of technicals over here. So we can see this long move to the upside, higher low. It is a higher high, but only just. It's certainly not a particularly strong continuation there of the trend, and then followed by a lower low, followed by a definite lower high here. So definitely a lower high and a lower low in price action. So that's why I say I'm bullish based on the weekly time frame. Having said that, this week so far, bearish based on the weekly time frame, but having said that, this week so far has been a bullish week, and it has been bullish above this horizontal level of potential support. So so this price action on the daily time frame, I have a higher low here. I don't, however, have a higher high. I did have a higher high here, but then okay, so let's just clarify this. So I've got a low down here and a higher high, higher low. However, that price action has been negated by the fact that prices then come down and formed a lower low here. However, it still is supported by this horizontal level of support here. Prices now come back up. This is decision point time really, because price has come back up to this same horizontal level of potential resistance. If price continues beneath these lows here, then that for me will be a bounce at that level and I will be bearish. If on the other hand, price does manage to make it and stay above this level here, and especially if it closes above on the weekly time frame, it looks like it's going to close above today, in which case I'll simply be looking for continuation to the upside on this one. So I do remain bullish at the moment on natural gas, although if price comes beneath this level here, then I will change my tune pretty quickly. So those are the commodity markets that I wanted to take a look at today. I did also just quickly want to look at the US indices just quickly, because I almost feel like no trading session is complete without just checking what's going on with those. Now, we've had some pretty spiky price action of late on these US indices. So the US 30 especially has really made some nice recovery. The majority of 2022 has been very bearish, as we all know, but the last couple of months on the US 30 particularly have been very bullish. And in terms of trend, we've seen a nice uptrend on the daily time frame. However, that has now pretty much come to an end in terms of price action here, because I now have, well, it's we had a big spike in price action a couple of days ago, and that kind of ruined the technicals a little bit. But if we ignore the spike, then what we have here is, and if we join that one all into one there, then that looks very much like a head and shoulders pattern, which has actually been triggered. So price has come beneath that neckline of the head and shoulders pattern for those people that do trade or use chart patterns. So that's actually quite bullish. Sorry, quite bearish. Getting my words muddled up this evening. So that's quite a bearish signal, and I am actually looking now for a continuation to the downside of that trend potentially. Anything could happen. You know, we could get more spiky price action tomorrow that steams the price up ahead here, in which case I will you know, change my tune and start to look for potential long opportunities. But at the moment on this, I see this specifically today's price action and the kind of pattern over here as quite bearish. So I will be looking for potential opportunities to the downside, and those could happen. I just want to clarify that those could happen on the intraday time frame. On the daily time frame, I wouldn't necessarily be trading short just yet, because again, those moving averages are actually all pointing upwards still. The other US indices haven't been as bullish anyway. So the US 500 hasn't really kind of come out of this downtrend here on the, well, it's a downtrend on the monthly, downtrend on the weekly time frame. That downtrend is still intact, where for comparison, that the US 30 on the weekly time frame, that downtrend was actually broken. We had broken out above the previous highs there. I still am slightly more bullish on the US 30 than on the other US indices. It's also worth noting, I mean, I don't tend to trade trend lines, but it's also worth noting that this breakout here has given us a higher high on the weekly time frame. It could just be that we need a bit more of a retracement and a higher low on the weekly time frame before that uptrend continues. So looking at it on a daily time frame might be a little bit premature at the moment in terms of an uptrend. So the US 500 still in a downtrend as far as I'm concerned on that weekly time frame, and it's beneath a horizontal level of resistance here. I am looking for short opportunities on the intraday time frames on the US 500 currently, and the Nasdaq even more bearish. I'm even more bearish on the Nasdaq. Lower highs and lower lows still intact here. Price looking to break back beneath the 200 moving average there on the weekly time frame. Everything looking fairly bearish currently. And on the intraday time frames, I would be looking for shorts there as well. I would just say though that I prefer the price action of the US 500 in terms of potential horizontal levels of support and resistance, I think I'd be focusing more on the US 500 for shorts on the intraday timeframes. So bear with me a moment while we go back to the presentation, just to give you the contact details for IC Markets. They've got a fantastic customer service team at the end of an email if you want to email them, or at the end of the phone as well if you want to speak to someone over the phone. Then the email address and the phone numbers are there. They do have all the usual socials as well, Twitter, Instagram, Facebook, so you can follow them to keep up to date with information. And if you've got any questions at all, please do feel free to contact customer services. They'll be more than happy to help. So that's it for me for this evening. I do hope to speak to you all in the not too distant future. Cheers, everyone.